Pavel Hala, welcome back, my trading warrior brother.
Hello, Dale. Do you hear me?
Yeah, loud and clear.
Yeah, that's great. Nice to hear you too.
Good to have you back. Saw your tweet, and you'll be talking about a market that's close to my heart. I'm telling everyone for months to build a silo and store it. So let's move forward and hear what you have to say about the wheat market. Because
I know that you've been, talking about wheat and grains in general
Yes.
for the past 2 months. So that's one of the reasons why I picked grains. But the second reason is that the truth is there is a lack of really good long-term opportunities right now. I think, or at least we've been thinking for a while, that it's best to be passive. For example, I'm personally just stuck in T-bills and have no intention to leave that position. And so that's the reason why I will not be making any, bold predictions about stocks or oil, because like I said last time, I'm still bearish on oil. That doesn't mean it is a great idea to short energy. That would be, I think, pretty dumb, because we are in a multi-year bull market, maybe more than a decade-long bull market. But the opportunity, I think, is still not there. And so I'm trying to pick more of a short-term opportunities that are less correlated with broad markets. So
Okay.
that's the reason I picked wheat. I just released a tweet
You want to
today.
share your screen here, buddy? Go to share screen.
Uh-huh.
I know you brought some visuals with you.
Okay, here we go.
All right. Okay. So, what were you saying previously? I actually think that you may see it as a short-term opportunity, but there's something out there in the Pacific called not just El Nino, Grande El Nino. Okay. So, and I remember the days El Ninos did bring dry weather to the Midwest during the growing season, and yields dropped, and there really isn't a lot of room for not a lot of carryover of a lot of this stuff. So
yes,
I
agree with you in this regard. And by the way, in the same way I'm long-term bullish energy, I'm also long-term bullish agriculture. So I agree in the long term, but I see a lot of uncertainty in the medium term. And it has a lot to do with the broad markets, especially the energy. I have a feeling that the grains and the agriculture in general will not bottom until energy bottoms. And I still don't think that energy has reached its bottom. So that's one of the reasons why I'm a bit reluctant to, embrace the long-term bullish bets on grains or agriculture in general. And there is also one thing you are well familiar, and it's that it works differently in commodities compared to, for example, stocks, because the tops in the stock market are a process, while the bottoms are basically an event. And it works vice versa in commodities, where the bottoms are a process. So it's very hard to time the exact bottom. We may be close to the bottom in terms of price, but you must not forget about the contango and these costs. But it is very hard to time the bottom exactly. So yeah, that's my reaction.
in everything.
Yeah. So it's much easier to time the tops in commodities. In the same way, it's somewhat easier to time bottoms in the stock market. But the bottoms in commodities and tops in stock market, this is more difficult.
Okay.
So let's get back to...
It's all, you know what? It's all difficult.
Yeah, it's all difficult, but something is more difficult than the rest, I would say.
Okay. Fair enough.
Let's get back to wheat. I published this tweet today, which was a reaction to my older tweet from the beginning of May, when we said that, of course, we were bullish wheat, but we thought that there would be one more brief dip below $6, which actually happened at the end of May. And now the price is recovering, and I think the bottom, the short-term bottom, and this is what I stressed in the tweet, the short-term bottom, the short-term low is probably in. So the Seaboard wheat will most likely move higher in the short term, but as I said, I'm somewhat reluctant to make outright directional bets. So I identified similar yet somewhat different opportunity, and it's an intermarket opportunity between the Seaboard wheat and
Kansas City.
and the Kansas City hard red winter wheat, because this is the 20-year distribution of the ratio, which is the top subchart, and the bottom subchart is the actual ratio. It's the ratio made out of the continuous contract, so it's an artificial time series, but for these purposes, it's fine. And you can see that the Seaboard wheat is incredibly cheap compared to hard red winter wheat, to the Kansas wheat. And here is the blue line where we are right now, and the left boundary of the green shaded area is the 5th percentile. So we are well below the 5th percentile. The Seaboard wheat is incredibly oversold compared to Kansas City hard red winter wheat, and this is not the only thing. There is also
so how do you execute the trade? You do it on a spread between long Chicago Board of Trade short Kansas City. You do
yes,
one
I will.
order.
Yes, I will get to it. I picked an example of a spread on the 4th chart, but I think that's actually the best way how to do it, maybe the only way how to do it. So yeah, that's what I would do.
Aren't there also, Pavel, some ETFs, I believe, by Tecrium?
Yes, there are ETFs, but I know that the Tecrium ETF, it holds different expirations. It's not concentrated on the front of the curve. But I'm not sure. I'm not sure if they hold just the Seaboard wheat, but I think maybe they hold, also the hard red winter wheat, the Kansas City wheat. But I'm not sure, so I won't say it with certainty. So, but definitely you cannot trade this through ETFs, because you would need an outright ETF for Seaboard wheat and a separate ETF for hard red winter wheat. And there is, I'm 100% sure there is no ETF for the hard red winter wheat. So that's the reason. So here we have the turn structure on the Seaboard wheat compared to the turn structure on the Kansas City hard red winter wheat, and you can see the stark difference between them. The Seaboard wheat is in contango, while the hard red winter wheat is in backwardation, and I think you can see when I add the 15-year average term structure at this part of the year that this is pretty much normal for Seaboard wheat, but it's very unusual for the hard red winter wheat, as you can see here, because it tends to be in a similar contango right now, but as I said, it's in backwardation, and so that's also important. So there's a lot of room for some kind of normalization, and I must not forget.
So reversion to the mean type of trade.
Yes, exactly. These mean reversions are dangerous because the market always has more room to become even more extreme. But I just think it already has become extreme enough, which is also what this chart is about, because this is the positioning in the Seaboard wheat compared to the Kansas City, the hard red winter wheat. So, for example, we can compare the speculators, and you can see that the large speculators that manage money are incredibly short the Seaboard wheat,
Yeah.
and somewhat neutral the Kansas City hard red winter wheat. And it is the vice versa for the hedgers. So that's why I think it has become extreme enough. And finally, here is another reason why the trade might make sense right now, which is an actual spread between September futures, the Seaboard and KCBOT Wheat, and it is the blue curve. It has already kind of bottom, which is good because it's always, it's not wise to trying to catch a falling knife. So we can say that it has already bottom, or at least there is a sign it is trying to bottom. And the seasonality is really favorable in the short term, as you can see on the averages. And there is a strong seasonal tailwind for this spread between roughly the middle of June till the middle of July. So this is one of the reasons why I like this opportunity in the short term. This positive seasonality is confirmed by the statistics by month below, where you can see that both June and July have been positive for this spread on average. This is the statistics for the actual spread, not individual commodities, because we need to analyze the difference between them. And so that's the final reason why I think it makes sense. Of course, anything can happen. One wild card is the situation besides the weather stuff you talked about. So another Ukraine, exactly, because the Ukraine is a major producer of hard red winter wheat. So if situation gets really bad, it might be a problem for this spread. But
isn't it amazing to you that Ukrainian farmers can bring in a crop in a war zone?
Yeah, that's pretty extraordinary. And
can you imagine that? Working your farm and hearing what's overhead or landing?
Yeah, especially close to the front line, because from what I heard, there are many farmers who are, trying to, work as usual, and they are close to the front line. And so that's really crazy. So
courageous. Anyway, just made me think about that. So I think the farmer has to be the most optimistic person in the world to want to go into farming, because when there's great weather, there's bumper crops, and so you have a lot, but you don't get much for it because everyone has a lot. And then when prices are good, it's because you couldn't bring in a crop like everyone else. So even though prices are high, you don't have the inventory.
You're right. And by the way,
who would want to do something like that?
Yes. I read a lot
all
of
the labor, huh? Yeah. Anyway,
I read a lot of
I respect
a lot of stories by farmers. I am also in contact with many farmers from the US, because they use our software. So especially the past years when the prices were low, those were pretty hard for many of them. But one thing I want to mention is still, you Americans have a great advantage that you have working liquid futures markets for these products. It is something that's much more difficult elsewhere. So at least you can, if you have the right marketing strategy, you can hedge your production, or at least parts of your production in advance. I think it's really helpful. In Europe, it works a different way, although there are futures markets, for example, in France, but they are not that liquid. And here it is that, when there is a bad year, everybody just starts screaming for money from the European Commission, and, socialize the losses. And this is how it works here. So I think the American system is much better. And, it's also much better if you look at the data, the US is much more, I don't know,
Transparent.
successful, or no, not transparent, but you can produce more efficiently with lower costs, and
sure.
it just works better. I mean,
Okay.
so that's a positive thing about farming in the US. But I would say it's easier in Europe because of the socialism. So you can, when you have a bad year, you can always call for money from the state or the European Union or somebody like that.
You always have a very interesting take on a strategy for something that you see as a possibility for being a good buy. Instead of just outright going out and doing it, you find relationships within that. And to me, it smacks of risk management. You feel that these strategies, I mean, I have found you still have to have, even though it's a spread, like say, for example, you were entering that spread today, you still have to know if the spread works against you, where you're wrong, don't you? Or where
Yeah,
you would, or where you are, or have at least a certain percentage amount that you're willing to risk on the position. How do you tell your clients to manage risk on a trade like this?
Yeah, I mean, we are not doing investment advice, so we do not comment on individual
Okay.
opportunities to our users. We are mostly, providing software, and we also do research, but we
Okay, then
strictly
let's do
avoid.
this. If you put it on the trade.
Yeah, because so if I would put the trade on, I would definitely not try to do anything like buy and hold. This is not even when I take a look at the spread itself, you can see that these moves are pretty large. This is so I forgot it is an intermarket spread, but these moves. This is something like
That's a
60
big move.
points. 60 points. That's
on a 5,000 bushel. That's $3,000 out of
$3,000. So personally, like I said, I would try to enter it now, maybe wait for some kind of consolidation, but I would try to make use of the seasonal tailwind, which starts at the middle of June. That said, this is not something that works precisely on a day, so if the market can start moving up today, or it can even totally disregard the seasonality. So I would try to get in,
buy a pullback.
And maybe wait for some kind of small consolidation, and then keep a strict.
And then maybe risk the lows as a spread if it's
Yes,
making new lows.
Exactly. That's a good idea.
Like 240. Yeah.
Yes, if the spread breaks below the previous low, that would be bad. But like I said, I can totally imagine just passing this opportunity. I'm no longer a trader. I became an investor not a long time ago. So, but even if I would be trading, I would be very passive right now. And this is not a good.
What are you worried about?
What I'm worried about liquidity crisis. I'm worried about that we get something or situation when the dollar spikes, or we have some problem in the bond market, and we get a liquidity crisis that crushes everything. All the commodities, no matter the fundamentals.
You sell the kitchen sink in a liquidity crisis.
Exactly. And as I said, I'm mostly, regarding the commodities, I'm mostly watching the energy market because, like I said, I'm bullish about many things in the long term, but I still think the energy has not bottomed yet. And many of these things will depend on energy bottoming. So once I'm sure that energy has bottomed, or it is so oversold that it's just crazy enough to consider buying it, then I would be much more willing to enter long-term trades. So speaking about energy, many people are trying to time this, but what I'm watching is not necessarily the net positions, but the net traders data that worked really well for us in the past. Because everybody is talking how the positioning is washed out and, I think like that. But if you take a look at the actual data, like the net traders here, you can see that the major bottoms in both Brent and WTI, the middle is the Brent data, the bottom is the WTI data. The major bottoms occurred when the speculative net traders indicator turned negative, like in 2020, 2018, and even before that, in 2015 and these times. But we're
not close.
We are not even close to that. So yeah, the market, the energy market is oversold for sure. And I would not short energy, but it is not washed out. So I would either wait for a sign of strength in the market, especially in the structure of the market, the intradollar spreads, and not just in WTI, but also Brent and Oman crude oil. If we do not get that, then I would wait for the real washout, which is the negative readings in these indicators.
That's probably in the fall or sometime in the fall or winter, I'm guessing, because if there is that risk off liquidity trade, that's going to last a few months. I mean, maybe the panic part, but so say we're peaking here by the solstice in the S&Ps. That would probably, and everyone thought the weakness was going to be in October. Everyone's waiting for an October crash. That's why I think look out for July. But it probably doesn't turn until, maybe the S&Ps are 3,000.
Yeah,
if that happens, right?
Yeah, I really try to avoid targeting specific levels because it rarely works. At least not for me. It's I prefer to always use the current market data to sniff, changing currents in the markets. Let's call it that way.
You're a guerrilla warrior in the market. So you stalk it. You don't even look at the obvious way to trade it. You're aware of risk, and you're trying to put as much of the probabilities of that idea on your side through spread trading. I respect your work, Pavel.
Yeah, thank you. I also like your work too.
Yeah, so it's really great to have you here. Your track record's been it's been very good since
thanks.
You've been a guest, and so everyone keep an eye on it. Do you have a quick comment on the sugar market? Patrick's asking. You were on top of that one before, while it was somewhat popular, but not extremely popular as it became. So I know you.
Yes, we commented on sugar on Twitter, I guess, a few days ago.
In an interview too. I think you brought up sugar.
Maybe.
Yeah,
and
maybe.
I'm very sugar because the spreads, you can see the spreads, the intradollar spreads here, and they have been weakening even before the sugar itself.
Sugar topped.
And you can see that it is widespread. It is the weakness can be visible across the curve. So it's not just focused on the near end. So that's one reason why
it got too popular.
Yeah, it's and definitely
bulls.
Yeah, and you also must realize that sugar is correlated with energy into some degree due to the biofuels and so on. So the weakness, the sugar has ignored the weakness in the energy market so far, but I think this is about to change. Not just because of the spreads, but the positioning is really blown out, as you can see here in the commencements of traders data. And this is not a timing indicator. You can see that the market has been overbought for a period of time or since the end of last year, but it creates conditions for a potential sell-off. So I would personally avoid shorting the market that has such a strong momentum, but I think right now it will turn, especially because of the weakness in the spreads.
Okay,
So I
great
think this.
warning to everyone who's following the herd right here.
Yeah, and
So,
we have. I can see we have a signal in our signals on spread charts, and these are just signals generated by a machine learning model, some kind of AI, which is trendy to say these days. And we have a signal on a sugar bear spread, and the signal was valid since the end of April. And maybe that's a much better idea to make use of the opportunity than trying to short the sugar itself. So,
are you human or a hologram?
why?
Just,
Yeah.
I don't know.
Yeah, I
All
get it.
my every question I asked you today came from ChatGPT
Yeah, no.
because I can't think of it. I need Chat to give me things to say because I'm pretty shy and I get real nervous doing interviews. So anyway, I'm kidding you, bro, and thank you so much, my trading warrior brother who doesn't really want to trade right now,
Yeah,
and
thank you, Dale.
for presenting the wheat idea to us, and uh, appreciate the content you bring to F.A.C.E every time you're here.
Thank you, Dale. Thank you for inviting me.
Okay, we'll talk in the fall.
Yeah, great. Looking forward to that.
All right, everyone, that's Pavel Hala. Follow him at spreadcharts.com, at spreadcharts.com. Go to his website. He has some great free material for you to, there's a look at, some of the things you could check out. And your website address, Pavel?
Yeah, our website is simply spreadcharts.com. So you can visit our spreadcharts and you can sign up for our software. We have also a free version, which is really powerful. It's not just some kind of demo, or you can use the premium features and advanced stuff like the signals I showcased today. But even the free version is cool.
Rooting for you, bro.
Thanks, Dale.
So I'll talk to you on Twitter and we'll set something up for the fall. Pavel Hala, everybody. Follow him at spreadcharts.com. And you could join the team for the morning edge in about 16 minutes. Good hunting on Turnaround Tuesday, everybody. And don't just count your pips or your cubes of sugar. Count your blessings. And we'll see everyone tomorrow. Adios. Thanks again, Pavel.
Yeah, thanks, Dale. Bye.
All right. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.